Hey, hi there. Welcome to Stock Talks with Aakash. So today I will be discussing with you the three rules that you must follow to achieve financial security. So what are those three rules? Let's dive into it. Okay, rule number one, you must have an health insurance. Health insurance. So why should you have it? Because even if you are putting all your money in your stocks or mutual funds, and if you get sick at any point in time, let's say after a year or so, god forbid, after a year or so, and you have a corpus of 1.2 lakhs, it will be down in a day. This is how much inflation is there in an hospital. So at all point in time, you must have an health insurance. Once you started earning, please have an health insurance. So how much should you have it? It should be ideally half of your annual salary. However, it should be minimum 3 lakhs. So if your salary is like not below 6, then still you should have at least 3 lakhs. Okay, and however, if you're living in cities like Mumbai, Delhi, then ideally, as per experience, it should be 10 lakhs minimum because hospitals like Max and Apollo, they charge huge amount, extortionate amount. So you must have their health insurance so that you could cover your medical expenses. Yes, sir. Second, after having an health insurance, you must have a life insurance. So it is very important to have a life insurance because if you're if you met an untimely demise, you must have enough money for your parents or for your loved ones to take care of their basic needs at least. How much it should be? It should be ideally it should be 10 to 15 times of your annual salary. So let's say if you are earning 50,000 per month, okay, so it should be ideally 60 lakhs to 75 lakhs. This is kind of minimum. Nowadays, you could easily get a cover of 1 CR. A lot of life insurance actually gives an advertisement for that. And when you're starting, ideally you should take on that point in time because it's very cheap or because you're actually young and you are not uh, going through any medical condition or for that matter. The last but not the least, the third rule after you are done with these two are first, then is the third one. It should be an emergency fund. Emergency fund. You should must at all times have this fund so that if you are unable to earn due to any reason, you must have enough amount to take care of your basic needs for at least few months till the time you are back to business. Okay. How much it should be? Ideally, of course, it should be 3 to 6 months of your annual salary. 3 to 6 months. Let's say if you are earning 50,000 a month, then ideally at all times it should be in your bank account 1.5 lakhs to 3 lakhs. You could put it in cash, in liquid mutual funds, or you could have an FD. I do an FD. FD is most preferable because this is emergency and you will not go through an emergency after frequently. Okay, you will rarely use it. So it's better to put it in the FD. Also, if you will only lose your interest, you will not lose your principal if you break it in the middle. Okay, just a recap. The three rules is your health insurance, your life insurance, and your emergency fund. Fortunately, I have a point of contact for you to buy these two. You could call on this number. And she is my mother, and she's a registered agent advisor in LIC and Star Health. If you have, if you would like to take it, please do consider calling, and we'll be happy to help you. So that's all for this video. I'll see you around in the next video. Thank you for watching. Bye.